Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. The false break higher back in late August over the top of the diamond pattern, which I had highlighted in blue, formed over November 21 to July 2022, started a move, admittedly initially in the wrong direction at the time, that has eventually led us to where we are now today. The pipe top formed on the 9th and 12th of September were the direct triggers for the start lower. The actual pattern, the lopsided diamond, is huge. I had in my previous commentary given a primary target X in the 166.75 area, whilst a secondary target, harder to achieve target X1, would be in the 142.40 area, which is currently below the bottom of my daily chart. I said at the time, and I quote, "Needless to say, given the size of the lopsided diamond pattern, these proposed targets below, assuming the break holds, lower holds, are some longer-term targets." End of quote. I also continued, and I again quote, "There is one other fly in the ointment. Perhaps, just perhaps, this lopsided diamond pattern is becoming a big bear channel. If that is to be the case, then the first area to look at below would be the lower bear channel line of such a pattern, and that's currently at 174.5. That's the end of the quotes. The extension of the bear channel you can see highlighted in green. The lower bear channel line, though breached last week and the week before, was only really broken after numerous attempts that went to a third level of indecision with a second consecutive close below last Friday. In part, this was due to support from the 50% Fibonacci line of the May 2019 to February 2022 move at 174 even, but I suspect more so from the neckline highlighted in red below of the January 20 to April 2021 reverse head and shoulders bottom, currently at 166.70. It was only today that prices smashed down through the primary target for the diamond pattern at 166.75. Now, should prices stabilize below this neckline, then we need to look lower again, down to the 2017 high at 159.30 and the August 2017 high at 147.25, and possibly down to target X1 in a 142.40 zone. However, if they continue low, then consider this. The action since mid-October could be part of a bear flag type pattern, in which case we may have a conservative target for this, not yet marked on the daily chart, but down in a 156 even zone. London coffee. Much like the New York contract, I could prattle on here about the market peaking at the end of August by reaching a secondary harder to reach target for the rectangle formed over March to June and subsequently falling away lower the very next day. However, that is not the key feature or features here. There were two relevant key features here in relation to the fall in this market. The first was early on. It was the early August until late September type of head and shoulders pattern. The neckline, currently at 21.36, was breached and properly broken, and it's highlighted in green. And since then, the market has broken down through the following. All the moving averages. The 50% Fibonacci line of the August to December 2021 move at 20.64. The middle time, currently 20.43 and highlighted in blue, of the late December 2021 to mid-July 2022 bearish Andrews pitchfork. The significant congestion zone split into a number of bands between 1968 and 2004. The congestion at 1945, the 2018 high at 1845, and finally slowing and halting just ahead of the 50% Fibonacci line of the October 2020 to December 2021 move at 1812 in the middle of last week. During the move lower, a new pattern emerged, highlighted in red trend lines above, or on the chart. To give you an explanation of this pattern, I would like to refer to my commentary from about a month ago, and I quote, "It was whilst I was studying this supposed neckline that I saw another clearer pattern that was a better fit for the recent action. I have highlighted the pattern in a thicker red color, so it becomes more obvious. It is a late August to date falling wedge pattern, currently 2057 to 2098. This pattern is a very reasonable fit for the action. It has the requisite number of touches per side to qualify as a mature pattern. The question is whether the market will follow through. I can't give a definitive target in either direction for this pattern, but I can give a primary size of move should either one of the two trend lines above and below be broken. A primary move higher would be right now something in the order of $144 on top of the break of the upper trend line, whilst the break lower would be something like $68 off the break of the lower trend line. This is one to watch. End of quote. I later made an assumption that the break lower below the falling wedge pattern was a genuine break, thus giving a primary target X1 in the 1957 area and a secondary target, the harder to reach target X2, in the 1870 area. 2 weeks ago, both target X1 and X2 were reached. So what happens now? Well, it seems right now that we have two, maybe three possible avenues. First, let's look at the 50% Fibonacci line at 1812 and the nearby lower time as being the end of the current move lower, leading to some possible consolidation before a possible attempt up towards the congestion overhead starting at 1945. Alternatively, it could be that we are seeing some consolidation here, even possibly as high as the 1945 area before the market turns back down with a possible bear flag type action and with potential down to the 1670 zone. This is by no means a done deal, but it is worth considering. There is a third solution, and it has only started to become considered by me, at least, because of the specific actions made over the last week and a bit. It is to consider, just consider mind you, to consider that we are making a nascent possible diamond pattern. I'll just let those three ideas hang there for a moment. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Tofpik and ADM Investor Services International Limited. And here comes the final bit.